evening. A warm welcome to all the members who have tuned in for today's session. It's an important topic that we have picked up today. This is the feedback and the response that we have received from most of the members across all the regions. Today's topic, it's trading supported by blocked amount in the secondary market. We have been joined by Shanti and Jasmine from UCA team and Aniket from NCL. So thanks everyone for joining in and making time out. It's an important session. So before we delve into questions, I just thought probably Shanti, if you just want to share an overview from an UCA perspective, and I'll then request Aniket to probably guide us or probably share a brief overview in terms of the NCL or the settlement perspective.
Hello everyone. So to begin with, because UPI is being introduced in the secondary markets, our UCC structures have undergone some changes. Now, these changes are applicable for all the brokers, all the clients, irrespective of the fact whether you want to opt for UPI or no. So, with the date of going live, no record in the old structure will be taken into account. So the records have to necessarily be in the new structure. Now, to come up with the important aspects of the new structure, I can tell you is we have introduced certain bank account fields because of ASBA, we require the IFSC code. So we've taken into account certain bank account fields and the depository details. We've added the number of bank account and depository details you could give us. Earlier it was 3, we've increased it to 5. Certain additional fields have been added and deleted based on the market feedback. Now, once you give us this, now this has been released in UAT already, so would urge you to complete the UAT. Once you give us the record, what will happen now? Earlier, the process was that when you give us a record, we send it for PAN verification, and wherever PAN verification is successful, those records are permitted to trade. There's another aspect which is involved now, wherein apart from PAN verification, we will also be validating the bank and demat account details. But for those clients who have opted for UPI, but the fact of bank and demat account status will not impact the status of PTT, permitted to trade. Now, if you are not a UPI client, your bank and demat account details will, as of now, will not get validated. This is the change. So once the bank the entire chain is successful, it is necessary to indicate a primary bank account and a primary demat account detail. It is necessary to give me one primary and the rest secondary. It can be any flow. While looking at the demat account details, please note that only the first 3 demat account details that you give will be sent for mapping. The next 2 will not be sent for mapping, but this doesn't mean that in case you've opted for UPI, we are not going to validate. We are going to validate all the 5, but the only fact is the last 2 will not be sent for mapping with the depository details. That is the norm for depository. Now, once we get a successful primary bank account and a successful primary demat account, and the client has opted for UPI, there's a UPI indicator is yes, then those records will be sent to CC, clearing corporations. The clearing corporations post their validations will give us a successful indication. Once a successful indicator is received, the client can trade in the UPI mechanism. While deregistration also, it is the same process. So once, if suppose tomorrow at a later date, the client wants to deregister from UPI, he wants to go for the normal mode of trading and not the this mode of trading, UPI mode of trading. So in the normal mode of, you'll have to send us a deregistration request. That request we'll send it to the clearing corporations for validation at their end, because they will check various aspects at there. They may give a successful or a rejection. If you get a rejection indicator, it will be displayed on the UCR, but if you get a rejection indicator, you need to send it back to us again, which will again send it to the deposit clearing corporation. They will validate and let us know. So this is the entire flow as far as UCC is concerned, data. Now, Aniket will take us forward for the clearing corporation.
Sure. Thanks, Shanti. So for these clients, as you are aware from the circulars, what really differs, first of all, this is an optional facility. It is optional for the broker to decide whether to offer it or not. It is optional for the customer to decide whether to take this facility or not. And brokers also have the choice to, because this is a new facility with very different procedures, brokers can decide to do it on a pilot basis. So let's say that a broker is not comfortable opening it up for all clients, but wants to do with a beta set of clients initially with limited number of clients. That is also permitted under the guidelines. So, but for these clients, the processes are fundamentally different. These clients will not transfer any funds to the brokers. They will create UPI blocks in favor of clearing corporation, which means that the money will remain in the account of the customer, but it will get blocked. No, the customer will not be able to withdraw the money, and the clearing corporation, based on the obligation, can initiate the debit. The role still remains, the risk management role still remains with the broker, because it is the broker who is executing the orders. The CC does not do any order level checks. So, and in case of any shortfalls, the broker continues to remain responsible. So in the order flow, once a mandate is created, the CC will notify the broker through the API that such and such mandate or block has been created for this customer. And then based on that notification, the broker can set the limit in the RMS so that customer can trade up to the, based on the risk management policy of the broker. And for fund settlement, so this block works in both ways. It works as collateral and it works as settlement also. So for funds pay in by the customer, we will debit this block. And for the securities pay in, there has to be early pay in done by the broker for that customer. Both pay ins have to be by 8 p.m. On the trade date itself. Initially, this facility is only there in cash market. So by 8 p.m. There has to be sufficient UPI block available for the funds obligation of the client, and securities have to be early paid in. If there is not enough value of the UPI block, the remaining obligation will devolve on the broker. And payout also, because now we know which customers have paid, which customers have not paid. Securities payout will go directly to the primary demat account of the customer, which is as identified in the UCC database, and funds payout also can go to will go to the bank account of the customer, which is identified as primary in the UCC database. So we have issued 6 circulars over the last 3 months, which members can refer to. On October 12, we issued 2 circulars. The first was the detailed operating guidelines, which is the basic document that I think everybody should refer to, and it gives complete picture from registration to payout, shortage handling, etc. So that's the most important circular. October 12, we also issued the API specifications. So in this, because all of this is going to happen real time, notifications, inquiries, etc., we have issued API specifications, what API the CC will host, what APIs will the members will host, and how will be the communication between them. That's the second circular. On November 13, we have issued a circular on EOD reports. What will be the end of day report, new reports coming in, and any changes, and what will existing reports show, what will be the new reports, etc. On November 13, we also issued a circular for test environment. So if the members want to test these APIs, what is the procedure, how to register for the to get access to the test environment, etc. That's in that circular. November 15, we also issued the product note that we received from UPI. So if a broker wants to develop an app which talks to a UPI app, because so how will be the, how should the broker design the system so that the UPI app of the customer can be called using the intent mechanism of UPI, and how the block can be done. That's November 15 circular. And one important point which many people were asking was about collection of the charges. So initially, the guidelines stated that only a fixed percentage can be specified, but based on feedback, we also went to SEBI, and SEBI also has kindly approved an alternate mechanism, which we hope is going to be more friendly and beneficial for the brokers. That circular was issued just a couple of days ago. On December 20th is when we issued that circular on how can the TM, other charges, everything else other than STT, stamp duty, and trade obligation that can be collected. Yeah, so that's.
No, thanks, Shanti, Aniket, for summarizing this. I think we have several questions that we have received. I think quite a few are actually pertaining to if you can explain or probably share an overview in terms of the overall process. So I think this will help cover most of them. But let me just delve into the questions. The first question is from Mayank Lavania from FinWizard. What are the important pointers in the whole flow and how do we differentiate between cash and the cash F&O customer?
Okay, so there is a clear direction that this facility will be made available in other segments, but to begin with, it is only available in cash market. So if a customer trades only cash market, then he can, of course, you can offer this facility to him. Whether you want to offer it to customers who are doing cash and F&O both, again, the guidelines leave it to the broker. Because broker will have to have two different procedures for cash trading and F&O trading. If the broker feels that I want to offer it only to cash customers, that's fine. But if you want to offer it to cash customers who do cash as well as F&O, then for the cash market obligations, the settlement will be through this block mechanism. So the customer can create a block and pay in payout will be directly with this accounts of the customer. But in F&O, the customer will trade with the same manner in which he is trading today. So customer can transfer, broker will maintain running account or ledger, etc. And another important thing to note is that because now our cash and F&O physical deliveries are merged. So on expiry, when stock derivatives expire and there is physical delivery, we settle it in cash market along with cash market. So even if a customer is doing cash through the UPI route and F&O through normal route, any physical delivery obligations that will come due to devolvement will be settled through the cash market route. So that I think is very important. So if you want to, it's your choice whether to offer to customers who do cash FO both or only offer it to cash. But if you offer through both, then F&O trading will be through the traditional model and cash market trading will be through the UPI model.
I would like to add one small point over here is that when we are talking about cash market, so it is only applicable for individuals and HUs, not the entire foray of clients. So we'll have to be careful. Corporates or other categories of investors in cash market, this is not currently applicable.
Okay. No, thanks. The next question I think is on the similar lines. I'll just read for the benefit of everyone. It's from Mehul from Fire Securities. If a client is enabled for SMA in CM segment and he also wants to trade in F&O segment, then F&O trade validation will flow through the existing flow or can be clubbed with CM. I think you covered this in the earlier one. So the next question is from Shailesh Kumar Patel, QI Brokerage. Is it compulsory to give this block mechanism facility to the client?
No, this is not a compulsory facility that a member has to provide to the client. It is totally optional to them. And it comes as an optional facility to the client also if they want to trade in the traditional method or the UPI method.
So thanks. I think this was well covered in the initial overview and thanks for addressing it. The next question again from QI Brokerage. Is it compulsory to participate in UCC UAT UPI block and other requirements which given in the circular as registered stockbroker?
So UCI file format which has been revised is already produced in UAT. All the members are encouraged to do the UAT, but it is totally optional for you as in your comfort.
Okay. Thanks. The next question is from Chaitali Angel One. How do a member avail the facility and what kind of integration is required with CC, depositories and exchange in case a member wants to opt that? I think we covered.
So,
but
I'll answer from CC perspective.
Yeah.
So basically, there will be multiple points. One, of course, for the exchange side, you will need to adopt the new UCC format. Then the member will also need to, in a way, to integrate its broking app with the UPI app. It could be through three routes. Either if it's a web page, it can show a QR. So the UPI app the customer can use the UPI app to scan the QR and create the mandate. Or you can do an intent call. So wherein you can your broking app can call the UPI app of the customer. And how does that integration work? That is given in our November 15 circular, that as to how you should in what way can you call the UPI app of the customer on the device of the customer. And the third is SDK integration, in which you can give a complete in-app experience for your customers. They don't need to move out to another UPI app if you develop the capability within your broking app itself. For this, you will need to approach banks to develop how you could develop this SDK. So that's for the UPI integration part. And third is, of course, the integration with the CCP. So with NSE clearing, we have published APIs as to how you can, what notifications you will receive, how you can request, etc. That's provided in our October 12th circular.
Okay. Shanti, you would like to add anything, or I think it's
well covered.
It's well covered, right? Thanks. The next question again, while Shanti has mentioned this, but the question is from Manish, JK Securities. What is the procedure to be done at the client level for registration and deregistration of the facility?
Yeah, so what has Exchange done is we have introduced a field called opt for UPI. While this facility is optional for individual and HUF, so there are 4 values that we have inserted: Y, N, NA, and D. So Y is when you belong to either individual or HUF, you can opt for Y. You can treat through traditional method, but if you're opting for UPI, then you can opt for Y. And from Y, you can go to D, that is deregistration. And you cannot select any other value apart from D. Then M would be for, again, individual and HUF. If you don't want to opt for this facility, then you'll have to populate the status as N. And for all the categories that this facility is not adaptable, yes, so it would be NA. And deregister would be only for the clients who have registered.
Okay. Thank you. Moving on to the next question. It's from Chaitali Angel One. How will a member get the UPI validation confirmation from NPCI?
Okay, so what the exchange will do is, as and when we get the bank details and depository details, we will focus on bank first. So once the bank details are entered in the UCI application, we will send it to sponsored banks, who will send it in turn to NPCI. They will validate it and give the status back to the sponsored banks, and sponsored banks would give it to us. And we would show the status to the members that if it is validated, invalidated, whatever the status that we've received from NPCI. And the same thing with demand details. The record would go to the depositories if it is NSDL or CDSL. So the status that they have given, we will be showing it to the members.
Thanks. The next question again from Angel One. Since member can give this facility on pilot basis to selected clients, is there any specific criteria for such selection, or it's completely at the discretion of the member?
No, that is completely at the discretion of the member. So if the idea of giving pilot is that if you may not want to, because you want to test it out first before you open it up for the broader set of clients, whatever is your policy for doing beta, whatever, if you want to limit it to some limited set of clients, it is completely open, left to the broker.
The next question is whether there will be a mock training for checking the entire onboarding settlement cycle under the UPI mechanism.
Okay, so like I mentioned, we have already made the UAT environment available, so brokers can register, given that the process is there in our November 13 circular. So brokers can approach us for registering for UAT, and you can create test the system out. There is no like mock as such, but you can participate in UAT, and in live you can go in live with a, let's say, even one client. If you want to do a pilot with one client, that's also possible.
Yeah, I think quite a few questions around that. So thanks. Moving on, how long will it take to convert client from UPI to non-UPI and otherwise?
Okay. So suppose if you've opted for UPI, then you will have to select the status D, like I explained earlier. And as and when you select D, we will send the record to the CC. CC will give a success or reject response. If it is success, then yes, you can move to the traditional method. If no, then the reason also will be shown to you, and basis that you will have to deregister again.
Thanks. The next question is from Master Capital, Neeraj Kumar. What is the role of UPI in UCC?
This question has already been answered initially.
Sure. The next question is from ICICI Sec, Smita Joshi. Once ASBA registration request is sent to exchange, it shall verify customer's primary bank account. How exchange will communicate to trading member in case request gets rejected on account of bank account verification failure? That's question number 1. And then there are a couple of other questions. Maybe you want to take this first?
Yeah, like I said, the status that we received from the sponsored banks or NPCI, that if it is validated or not validated, that status will be shown to the members.
Okay. The next question is whether there will be any specific file format.
There wouldn't be any specific file format. We will obviously publish a report where these details are included in the current file formats that we give. So the members can pick up from there.
Okay. And the last question on last sub question is, will exchange communicate this rejection to CC as well?
Okay. So what will happen is if you have the bank accounts and DP details, we send it for validation and both of them have to be validated. Once both of them are validated, only then we will send the record to CC. Suppose if you have DP details as invalid and bank details as valid, in this we will not send the record to CC.
Okay.
So,
yeah. No, that's important to note. Both the details needs to be validated and in order before it gets communicated to CC. The next question is again from ICICI. At what frequency the exchange shall send ASBA registration confirmations to CC?
we will send all the records that have opted to CCs once in a day.
Okay, and this is tentatively by end of the day, or is there any specified timelines that we have?
Yeah, mostly end of the day.
The next question is from RKSV Sayed. Registration deregistration is to be conveyed to users by T+2 BOD. What is the exact time window by when TMCM will be informed about the same? And he is also, suggesting that they need some buffer to prepare the back office and switch user status. So, any thoughts around this?
So, I think like Jasmine mentioned, we will receive this information on EOD T+1, and whenever we receive it, at the same moment we will convey it to you as well that we have got it. So that's like a second confirmation to you that the data has also been transmitted, but there'll be no time gap. So like within a minute or so from from the time exchange gives us the data, we don't have to do any validations as such. We just have to give a acknowledgement that this is now reflecting in CC's records also. So the moment you get it virtually at the same time, you will get the confirmation from CC as well.
Okay, thanks, Aniket. The next question is from RKSV. Under the intent flow, what is the UAT status? And when can TMCM start integration with the sponsor bank, CC sponsor bank?
Okay, so actually you don't need to integrate with CC sponsor bank as such. You can integrate with any bank of your choice, because if you visualize it, it is the broker app talking to UPI app, and from UPI app it goes to the it goes to NPCI. From NPCI it comes to CC sponsor bank. So NPCI and CC sponsor bank are integrated. On the broking side, either you could as of now, any so NPCI is working with UPI apps to develop this facility. At the moment, some are in UAT. I don't think anybody has deployed it but what some other brokers are also doing is they are developing their in-house UPI app. So using an SDK integration, which UPI offers through another sponsor bank. Doesn't have to be CC sponsor bank necessarily, but through your own working with a bank, you can offer SDK. If you offer SDK, you don't really need to depend on any other UPI app. And in that case, that gives you more flexibility also, because customer doesn't have to go out of your app. You know which app is linked to the UPI, because suppose you are relying on a third-party UPI app, you don't know which account is linked to it. So it might happen that the mandate get created, but we will not accept it. We will release it because it is not a validated account. In SDK, you will not have these issues. But yes, you can work with any sponsor banks that you want to work with for this.
Just a sub question on that. Which PSPs are onboarded, and if there are any timelines to onboard major PSPs?
So for getting PSPs on board, that's NPCI's activity, and NPCI is actively working with multiple PSPs to be onboarded. But as of now in testing, I don't think there is any other third-party PSP which is not related to broker. But they are in development, and NPCI is actively working on this.
Okay, thanks. The next question from RKSV. Maximum block creation in a day is 15 lakhs per account into 5 accounts. Is the understanding correct?
Yes. So these are NPCI limits. These are not CC limits. But I think there has been some confusion over it. So better to clear it out. So there is per mandate limit of 5 lakhs and there is an aggregate limit of 15 lakhs in 24 hours per account. So some people have kind of interpreted it to say that there can be only 3 mandates per day, but that's not true. One can create 1 lakh mandates, 10 1 lakh mandates are possible. So but one given mandate cannot exceed value of 5 lakhs and all mandates put together cannot exceed value of 15 lakhs per account. But that's a 24-hour window. So it's possible that today you created 15 lakhs, tomorrow you created another 15 lakhs. That is possible. So both these limits are again 24-hour limits and they are all applicable per account. So if there are multiple accounts, then there is again you can create.
Thanks. Again, few questions around the same 15 lakh 5 accounts type. So I think we have covered all of these. The next question is, what are the rejection codes and underlying codes for rejection for registration, deregistration, block creation, and block closure?
So registration, if you could take up registration, deregistration.
There wouldn't be codes as such. Whatever the status is, basis the validation, we will show it to the members. There are no codes as such.
Okay.
Okay, for block creation, so basically block creation happens in NPCI system. So we cannot reject a block creation. What at best we can do is we don't accept and release the block. So this again, when do we auto release a block? All of that is there in the API specification, which we issued on October 12th. But roughly speaking, the major reason for which the block can get released is two. One is that it is not come from the account. So either if the client is not registered or if it has come from an account that is not a validated account. So we will check that for this, the TM, the UCC and IFSC account number combination should be registered. If it is registered, we will accept the block. If not, we will not accept the block. Also, no, we are not going to open it up to all the banks, right? So because ultimately the risk of the CC is taking a risk on the bank that the bank will honor the block. So we will whichever banks today are eligible to issue BG and FD in our favor, that is the universe. So whenever, as and when these banks get ready, their customers can start offering. Their customers can use their accounts to create blocks in our favor. So if it is beyond the banks that are eligible, then also it will get rejected. And of course, these banks will also have their limits set to them. So in case if a bank has too many blocks created which exceed a limit, we will issue a circular that we are not going to accept fresh blocks from this bank.
Sure. The next question on the same point, will the blocks be debited in FIFO order of creation?
Yes. So let us say that in an example, a customer created a block of 1 lakh and 80,000 was the obligation. We debit 80,000, 20,000 remains. The second day, a customer creates another block of 1 lakh and for the second day, 50,000 is the obligation. So we will go by FIFO. First, we will debit the remaining 20,000 from the first block and the residual amount we will debit from the second block.
Okay, thanks. Under what scenario can the exchange stroke CC close a block from their end? Or the onus of closure is on the broker only? Example, 90 days of inactivity.
Yeah, so I think 90 days of inactivity is the only case where CC will close the block. Other than that, it will always be at the request of the member.
Okay, thanks. Can a user request for a multiple block creation simultaneously?
Yes, so like I said, so if subject to the NPCI limits, you can create multiple blocks at the same time.
The next question is again from RKSV. Can a user deregister while registration is in process?
So registration and deregistration are two different legs. So while you are registering, you cannot deregister.
Okay, thanks. The next question from ICICI Sec. What would be the blackout period timings?
Okay, so I think for the broader benefit, I think there will be a blackout window during which we will not accept releases. So what happens is, because 8 p.m. is when we are actually going to process the debits of the block, we should not have a situation where we have arrived at something and we are debiting the block and at the same time a release request comes. So that's why there will be a blackout window around the time that we debit, during which we will not accept. So during that time, if any additions come, we will acknowledge the addition, but will not take it in the system. and if any releases requests come, those release requests will be rejected. So this blackout window period will be around some, we have to yet to kind of give the exact window, but it will be around 8 p.m. So some time before and after 8 p.m. is when that of course we will issue in the circular what is the exact timing, but it will be around 8 p.m. sometime before and after.
The next question, how the processing would be for the block creation or block release request raised during weekends or the trading settlement or the trading holidays or the settlement holidays?
Okay, so for the NPCI and UPI will work 24/7. So and as far as our new system is there, that's also working 24/7. But some facilities will not be available 24/7. So and in case of UPI block additions, that's happening outside. Anytime the UPI block is created, we will receive and acknowledge it. So even if it is weekend, night, anytime. But we will of course add it to collateral when during market open. Anyway, beyond market hours, nobody can trade also with that block created. We will anytime if it's on weekend also, we will acknowledge the block, but we will add it to collateral in the after our BOD. As far as release is concerned, because we have to do checks, it will the timings for release will you can see tentatively they will be same as the allocation deallocation timing. So whenever you can the existing timelines for deallocation of collateral, you reduce allocation from one and allocate that reduction of all that the same timing will be followed for releases also. And there will be a blackout window. So during blackout window, we will not accept releases, but after blackout window till the deallocation time, whichever is available, you can request for release of the blocks.
Sure. Thanks, Aniket. The next one is any timeout period, that is if response for any request is not received from CC after 5 or 10 minutes or so, will the request be marked as rejected?
So actually, this is not clear as to what request it
request
is.
there?
Is it block creation or release? I'll anyway answer. So if it is a block creation request, you can enquire the CC. So the flow is like this. So you create a block, and then you are not receiving. You create a block using a reference number, and you have not got a response against that reference number for the CC. So what we have done is we have given a inquiry API to you. You can call the inquiry API and we will respond with the status that we have. If we don't have the status, we will go and check the status with sponsor bank. And if the sponsor bank doesn't have the status, sponsor bank can also query NPCI. So ultimately, NPCI will definitely have the status. Based on this inquiry APIs, you will get a response. Additionally, we'll also do reconciliations with banks from time to time. So this is for the creation, and similarly for release, if you want, you can. If you have submitted a release request, we will process and give it back to you. It is on the. It depends on the bank that they have to. So if it fails in the NPCI leg, that doesn't matter. We would have processed and reduced it from the system, and NPCI and banks will reconcile, and they will release the block. Even if it times out at that time, NPCI and banks will reconcile and release it later.
Okay, thanks. Another question is from Kotak. In case the customer has paid the amount to CM, how will the block be released?
So this question is not valid, to be honest, because by definition, the customer who is opting for UPI should not give any cash to the broker, cash to the clearing.
This is clear. The next question, I think we have 3 or 4 of them, which are similar or similar questions, I would say, across ICICI, Sharekhan, Zuari, Paytm Money. I'll just read, the gist of it. Brokers need provision to recover flat charges like AMC, demat charges, bounced contract note charges, CNT charges, which can't be collected in percentage of transaction terms.
Okay.
So I think there are actually a couple of more as well, certain indirect charges as well, platform fees, EDIS, transfer, annual maintenance charges, which also could not be recovered from the blocked amount.
So I think we have issued a circular on collection of brokerage just a day ago on December 20th. I'll explain how the new method works. So initially you were required to announce a percentage, flat percentage, and based that's kind of the maximum brokerage that on trade value, and you could receive, you will CC will debit that and give it. So for example, let us say that the customer has done a purchase transaction of 1 lakh, and 1% is what is set as the percentage of charges. So this percentage of charges encompasses everything apart from STT and stamp duty. So be it like SEBI turnover fees, exchange fees, your own brokerage, or whatever else is there, everything put together should be in the form of this 1%. And we will take that percent. We will, first of all, we will publicly tell this is the percentage, so that customers should not dispute it. Why did you debit it? We'll tell us we'll issue, like publicly display that this is the percentage for this broker. 1% is maximum. Then now the broker can actually upload a file as to what is the actual charge. So in this example, 1% is the charge, 1 lakh is the trade. So 1000 comes to be the default value. Based on the actual brokerage charge, suppose it only comes to, let's say, 200 rupees. So then the broker will upload a file to us saying that not to take 200 rupees, they don't take this 1000 rupees brokerage, take only 200. There is a cutoff time for giving this file. If the broker does not give the file by that time, then what we will do is we'll go ahead and debit this 1000 anyway by default, and then the broker can say that okay, 800 is excess, then a broker can pay back 800 to the customer. Now this the reason for this is that this is in the regulatory structure and how the discussions with SEBI, etc., that there should, the dispute should be, there should not be any disputes here. So it will be calculated by CC and debited by CC, and there will be a maximum cap which is published to the market. And this is how it will work. So basically, initially we had only that fixed percentage as a model, but based on member feedback that then we will set a high percentage, and there'll be too many refunds. We will every day we will collect less, and there'll be many refunds to the customers. So then we also took it up with SEBI, and they have also agreed that let there be a file upload also, which will be less than the, as long as it is less than the default percentage, you take it. So suppose 1% is the max brokerage, but broker says no, take 2000 rupees brokerage in the example, we'll say no, whatever we have announced is 1% only, so we'll go with the 1000 rupees charges. As far as this flat, any AMC, suppose the customer does not create any block or does not trade, nothing is there, and you have some annual charge, that you will have to take up with the customer, that you will have to collect from the customer. That will not be, it will not be possible to collect it through this mechanism.
Okay. No, thanks. Just moving on to next. Will the TM charges be recovered by CC in future, or for historical outstanding amount if there is any insufficient block balance on a particular date?
Yes, but let me clarify how it will work. So suppose like for this example, say 1000 rupees was the amount arrived at, and the block is only of 600 rupees. So 400 rupees will be debit balance. So in future, if there is any payout going to the customer, or if there is any new block created by the customer, we will take this 400 and give. But having said that, you are always expected to upload it on the same day. As long as, so suppose for today's trades, you have uploaded 1000, which is valid, but the block is less, we will, and then we will collect the remaining amount in future. But you cannot upload backdated brokerage. You cannot say that, by 1 week ago, I had uploaded this much brokerage, but actually brokerage was greater. So then that won't work. Every day you have to upload that day's amount only. But if there is shortage, if there is not enough block, then we will carry forward the debit balance, and we will collect as and when there is payout to the customer or a new block created by the customer.
Thanks. This is helpful. Again, from ICICI Sec, Harsha, what will be the provision and handling of bank charges for UPI mandate creation?
So, well, as of now, they have not announced any charges for UPI. So if as and when it is comes, then that time we'll have to see, because if whether it is applicable on which side, is it applicable on the issuing side or on the remitter side, we don't know. So we'll have to wait and see. So as of now, there are no charges. If charges come, if and when they come, we will have to answer that question that time.
Sure. The next question, I think Shanti may be applicable for you from ICICI, Harsha. Will stamp duty and STT needs to be displayed on the contract note, as this will be directly calculated and recovered from CC?
So as on date, there is no changes in the contract note format. So whatever you're displaying currently in the contract note stands. So so even the stamp duty and the STT which is being calculated will have to be displayed on the contract note.
And another sub question: How will above be accounted in the customer ledger by the trading members stroke brokers?
So what happens is first notional entry will be created whenever a block is being created. You will create that amount. Suppose say example 1 lakh rupees is the block amount. So you will create a notional amount of 1 lakh rupees. Subsequently, based on there can be a scenario where three scenarios where trades have happened, where partial trades have happened to that amount, and full trades have happened. So accordingly, according to the three scenarios, you'll get CCs will intimate what is the which scenario he falls under. The client for accordingly you will adjust the entries over there. If any amount is left over, say if out of 1,75,000 has been utilized for trades, remaining for 25,000, since it's a notional entry, you will reverse that notional entry. So this is how you will account for in the ledgers.
Okay, thanks. The next question is from SPS Share Brokers, Pankaj Madani. What is the process for excess debit amount? I think this is not clear. Maybe, I'll just request if you can reach out to the RM or probably write to us. We'll help clarify. Moving on to next, it's from Geojit Sheljo. What will be the option to get the payment if any charges debited in client's ledger apart from the trading obligation?
So apart from trading obligations, STT stamp duty anyway today is also calculated by CC and it will be collected by CC. Other charges, if it is not trading charge, the SAB turnover fees, exchange fees, your brokerage, etc., that all can be clubbed in a percentage and collected like I mentioned. Anything other than that, the member will have to collect from the customer.
Okay. The next question from Choice.
And I just sorry,
Yeah,
one other point that I wanted to mention is like MTF clients are not eligible for this facility. So like if you are asking about MTF interest and those things, MTF clients cannot use this facility. So they are excluded.
Oh, thanks for clarifying this. The next question from Choice Equity Broking, Raja Daga. How broker collect statutory charges from the client?
I think that's
clarified. The recovery of loss amount if client does intraday trades in ASBA buying and day-end delivery up to the block amount.
Well, it was not very clear from the language of the question, but what I inferred is for whatever reason, if the obligation of the customer is more than the block, what happens? So if it is if this whole obligation, including the trade obligation, brokerage, and other things, all everything put together, if there is not enough block, then what we will do is all the securities of the customer will be settled in the customer account with a pledge to the KUSPA account of the member, and we continue to maintain this debit balance till the time it is recovered. So if the customer, two things can happen: either customer creates a new block, then we will debit the outstanding amount from the block and give to the broker, or there is a payout to the customer which can be on account of any other sale or whatever was pledged to KUSPA in the first place has been sold. Of course, whatever is in the KUSPA the broker will sell in the customer's UCC. So that also payout due to the customer. From that payout, we will adjust and give it to the broker. Only thing is that while we maintain this in perpetuity, if the client is deregistered or if the member changes the clearing corporation, or if PM shifts to another CM, in these cases that debit balance will be zero. Other than these three conditions, we will continue to maintain this debit balance as long as the client is registered and with the same clearing member. And whenever anything is there, we will recover.
Sure. Thanks. The next question, Shanti, probably, or Jasmine, probably for you, is from Sharmili Motilal Oswal. Primary account holder and the PAN will be verified against bank and demat account details provided by the client. In this case, if primary holder is the second holder in the bank account, then whether it will be considered as a mismatch.
Yeah, so what will happen is only primary details must be updated in the UCC database. Suppose you update secondary or any other detail, then that will be subjected to validation and you will receive a negative response. So it is advisable to put primary details so that the response will also be positive. It will get validated and you will have a successful validation response.
Okay. The next question this was on the bank side. The next question is on the depository side. First three demat details would be sent to depositories for mapping UCCs with the demat account. then which demat account details would be considered as the primary depository details?
So the details that the exchange sends to the depositories will remain the same, which is 3 right now, and it will be 3 itself. In coming days, we will increase it to 5, but for now it will be 3 itself. And if you are updating among 1, 2, 3, then you will have to update one primary as one amongst the 3. You cannot go for 4 and 5. Even if you are, we are not limiting you that way, but that will not be sent to the depositories for mapping.
Thanks. That clarifies. The next question from Chaitali Angel One. New UCC format has a facility to capture director details up to 5 directors instead of 20 as was in the previous case. Any specific criteria to select amongst the directors list to update the same in UCC if the company has more than 5 directors?
Yeah, so earlier director details were having 20 contact details that we were capturing, but now it is subjected to only 5. How you choose that, who are these 5 that you are going to update, it's totally on the members. UCI team does not advise on that.
Okay. The next question is from Grip Broking, Jyotsna. Is the new UCC structure applicable to stockbrokers operating as OBPP platform?
We would actually want more clarification on this OBPP platform, like how is that relevant to UCI? So once we get the clarification, then we could answer that.
Sure, thanks. The next question is from Manish, JK Securities. Does client registered under the facility can provide collateral of securities other than Group I securities?
Other than Group 1 securities. So actually, see, if today what happens is when the customer provides you securities that are not accepted by CC, that are not Group 1 securities, what you can accept it, but then you allocate collateral out of your prop collateral to this customer. In case of these clients, you cannot allocate collateral because whatever the collateral has received, you have to give to the CC. So in this case, because Group 1 only Group 1 is what is eligible as collateral at CC, you will not be able to take other collateral and allocate your own collateral in lieu of that. So no, the answer is no.
The next question is from Renata Kotak Securities. If a client shares are in Puspa and he has paid the amount, will he be able to trade with the same blocked amount created?
So again, I think this question is not clear, but because first of all, like I answered in an earlier question, you cannot take money from the customer. If the shares are in Kuspa and the customer wants to pay the money, what the customer should do is create a new mandate, create a new UPI block, and the CC will collect it from the new UPI block. You should not take the money from customer directly. If you want to take the money from the customer directly, you please deregister the client, because once the client is deregistered, you can take money from the customer.
Thanks. I think this got reiterated a couple of times. Hopefully, this is clear by now. I think we are moving to the last question from Sher Khan, Amit from Sher Khan. Any change in exchange reporting?
So exchange reporting, yes, UCC structure has undergone a change. You need to report data in the new UCCs. Again, this is applicable for all in trading members, whether you are opting for TASBA or no. But yes, 100% brokers have to upload, because once we move to the new structure, the old structure data will not be accepted. So there is a change in that particular aspect. With regard to other reporting formats pertaining to inspection, there has been no change. Just you need to ensure that clear balances are being reported. The notional balances are removed from that.
Okay. That brings us to the end of the session. Overall, we received 50 plus questions. I think, and sincere thanks to both UCI as well as NCL team for joining in, because I think we managed to clear most of them. The couple of them where we don't have clarity, we would request the members to reach out to us, and we'll definitely get back to you with a suitable response. Thanks again for tuning in for today's session. Over to the next session. If there are any suggestions which you want to which you want us to have a session around that particular topic, feel free to write to us. In any case, we have lined up next couple of sessions, but if there is any suitable suggestion, we will take it up in the first week of Jan. So thanks a lot for tuning in, and thanks a lot everyone for being around for today's session.